morning, ladies and gentlemen. Oh my lord, we have a lot to talk about this morning after that non-farm payroll report. The long end treasury yields are ripping. We've got the dollar was heading higher, but I believe it kind of backed off a little bit. We have a lot to talk about with this reaction out of the market right now. Rate cut pricing, what exactly going on right now? Because again, ladies and gentlemen, in order to have long-term success in the market, you have to understand the big picture and the data that's coming out and how it affects everything. So, ladies and gentlemen, it is public live day. So, say good morning to somebody in the live chat if you guys would like to say good morning to me. I'd love to receive some good mornings over here. If you guys are new to the stream, new to the private mentorship community, new to anything over here, let me know. I'd love to welcome you guys in here. Let's do our little bit of a roll call, ladies and gentlemen. See who's in here this morning. I know it's going to be a fun day. Very interesting. I mean, this is kind of I don't want to say like, well, I'll say it. I told you so. Like I can only scream from the rooftops so much, guys, about the need and the necessity to be sitting on the sidelines here, waiting for the market to tell us what it wants to do next after the last FOMC meeting and really getting through this next round of really, really big and critical economic data. So, ladies and gentlemen, as always, it is a public live day. This is public live day here. We do only Fridays. You guys get these public live streams here. Every other day is private for those of you guys in the mentorship community. But again, make sure you guys are hitting that like button on your way in. Costs you guys nothing to do it. Helps me out a whole lot. Spreading these streams out to as many people who actually want to learn to have long-term success in the market. So let's do our little bit of a roll call here, and then we'll get into it, see who we have in the live chat, and then we'll get into it, everything. And we're going to go through it. Make sure, again, this is going to be the part of the video that if you guys miss it, you're watching it later, this is going to be the one that you're going to want to go back and watch and reference again. So, oh my God, we got a lot of you guys in here this morning. Ooh, we've got some slackers on the like button, though. Let's see. We got Dawn, Daily, Taylor, Garrett, Be Free, Starsky, sorry, there's a glare, Dr. Bob, Gerald, Tommy, Diego, GC, Eddie, Ian, Alex, DJ, Rycac, Tor, Money Wicks. Let's see. We got Nickel. We got Victor, Jackie, Icy Arc. We got Chanley, Brosio, BTD. Yeet. Good morning, ladies and gentlemen. How we doing? So, all right. Just to provide a little bit of a backdrop for you guys to make this make a little bit more sense as to what's happening today, because I think there's a lot of confusion. Maybe from some of you guys that are new or just don't put that much of an emphasis on data and how the market moves, which you should. So at the last FOMC meeting, the Federal Reserve cut rates by 25 basis points, but it was labeled, and we kind of expected this going into it, as a hawkish cut. Why? Because they guided lower. At that FOMC meeting, we got something, we received something called the Summary of Economic Projections that comes out quarterly. Now, in that summary of economic projections, the prior expectation for rate cuts in the year of 2025 was 100 basis points, which is 1%. And in the new one that we received at the last FOMC meeting, it was cut in half to 50 basis points. Now it's a little bit lower based on market expectations. So the market is now pricing in less rate cuts in 2025 than previously thought. What does that do? Well, if you are if your business isn't cash flowing very well and you need to take on more debt, it's going to make it very difficult for those types of businesses to have success in this type of environment, especially if they were expecting interest rates to be lower. Think about if they were making decisions based on interest rates. Well, then those decisions then have to change. But what is the data then that the Fed is looking at in order to give us that understanding that, okay, they are then going to move back their expectations for cuts? Now, we're going to get into the deep nitty gritty of this because a lot of the time the Fed is wrong. And this is reminding me a lot of September and October of 2023. So this is very important here. So just for those of you guys, we got to go through this. Starting at TMF position? No, we're going to talk about that too. I'm not touching the bond ETFs or anything this time around, but I have something else that I'm going to be going for, which I think is going to be better. So what is the Fed looking at in terms of data? Inflation in the labor market. The inflation data that we've seen, I mean, PCE, the last time it came out was decent. It wasn't bad. It wasn't great. It was a little bit lower than expectations, which is relatively good. Now, hold on. Now, with a lot of what we've seen kind of over the last year, now the Fed is being a little bit more political, and I think it was yesterday or the day before, they made a very political comment, which I think is going to come back to bite them. They basically said that they think that Trump's policies within immigration and taxes is going to be a little bit inflationary. So they've then moved down or moved out. Sorry, they moved out their expectations for when the Fed is going to. Hopefully, I mean, I don't think they're going to, but when their expectations are for when they're going to get to their long run 2% target. Now, they shouldn't be commenting on that because, first of all, it's a bunch of PhDs that are talking about in theory of what could potentially happen at the Fed when we don't actually know what the policies are yet. And that's also one of the reasons why the market's kind of flying around. So, then we think about the labor market. So inflation data, they think that if they continue to cut rates, that they run the risk of inflation flatlining or even moving back to the upside, which is not what they want to see. Now, a lot of the increases in inflation in the CPI data and PC and everything has been from shelter. So, and you now have oil going up. So that's not going to help. But a lot of it has been from shelter. Okay, so that's the inflation part of it. They are worried about running the inflation risk right now that the Fed sees is to the upside. So again, guys, make sure you guys are hitting that like button on the way in here. Nobody else in the mainstream trading space is going to be able to talk to you guys about this stuff. They just aren't. They don't know. They just have their little cookie cutter setups on the chart, and then they don't make any money. I guess that's how that works. But then you think about the labor market. So and I think this is where again we get into NFP today, which is going to be a little bit confusing for people. And I put this out in the Instagram broadcast channel that bad news is good news and good news is bad news now. So if you see more people gaining jobs and the unemployment rate is lower, what that can do is provide increases to GDP. You can have basically a stronger economy and it can run a little bit hotter, which then can increase demand, which can then increase prices. So that's what the Fed is worried a little bit about on the labor market side. So if you then see what we saw this morning out of the non-farm payroll report, that there were more jobs added than expected. The unemployment rate was lower. Average hourly earnings are going up. Obviously, given the backdrop that we've just talked about here, the market and the comments from the Fed are obviously going to show us that the market is then going to price in even less cuts for 2025. That's why we're selling off. And the bad news is, as good news, is effectively that. You see, yes, more people gaining jobs. That's good. Again, that's good news. But it's going to be interpreted as bad news because the market wants more rate cuts. So right now, we're pricing in about one cut in 2025. Now we can kind of get into some of the more. Does that make sense to everybody, though? I want to make sure that makes sense to everybody because, like, understanding these things, guys, is critical to your long-term success in the market. And you're also the understanding of like looking at the market this way. You're gonna understand when the times are where you probably don't want to be slinging a whole lot. Also, shout out to everybody that took this volatility zone that I sent to Discords every single morning. Oh my god, that one was nasty. And then the day trading mastery course strategy was just printing left and right on Wednesday as well. So that was awesome. But does that make sense to everybody? I want to see. Like that whole kind of spiel that we just went through. I hope that makes sense. For those of you guys that are filtering in, go back and watch it. That's critical. But now we have to take a look a little bit at what's actually happening off of this reaction. Yields higher, which this can wick. And I think it's kind of likely that that does for a couple of reasons. Yields higher like this is obviously not good. But it can bring housing prices down and some rents down too. So that could actually be good for inflation. So we'll see. That's going to take some time to develop. The dollar heading higher, but is moving back to the downside here. Oil absolutely ripping here this morning. And then we have the market. Now, I don't want to look at the ES chart here. I want to look at SPY. And I want to show you guys this because this is really, really, really interesting. What have we been talking about here? We are in a downtrend, but we basically have this like lower or higher low scenario here where we're basically just wedging into this area that we have. And we're effectively just chopping in this zone here. Now, after that NFP reading and yields up and everything, I would have actually expected this market to drop below the zone. It didn't. It held, which is interesting to me. Because if they lose this area here, you are probably going to go down and fill this election gap, which I think is like 577, I think, on the daily here. 570 on the SPY, 576.76. You could end up going down there. Now, one of the main reasons why we're seeing the market do what it's doing in the beginning of this year, guys, is one, obviously what we saw at the FOMC in the data that we've seen since then. But it's really based on the market's uncertainty as it relates to what is going to happen on day one of the Trump presidency. That's really what it is. Once we understand, okay, this is kind of the path we're going, we see like that first round of like executive orders or whatever he's going to do. The market's going to have a better understanding of where we're headed. Less uncertainty in the market gives large money and institutions the ability to buy. Uncertainty is not where they want to come in and buy. And again, with an economy that's doing all right, I personally like people are going to talk about like the possibility that we start drilling and the market's going to crash. And like again, like it could come down a little bit. And I'd personally love it if it did, because I have in one of my larger accounts, I have the highest level of cash that I've ever had. I'm just trimming at the highs. You guys saw my Palantir call. I'm out. I mean, we can take a look at Palantir today. Yeah. I mean, guys, I sold Palantir on this day around 71. I was done. No, thank you. So, but we were also in this sub 16 and I was selling at 71. Thanks. I'll take it. But it is interesting here that we've held. And that to me is where it gets interesting here, where it's very possible that the market just bounces off this and you fade the NFP move. What's going to give it away though is yields. If yields start to fade here today, especially like the 30-year, oh, you'll see some market pop. But who knows? This is really not the day to go crazy. And this is something that I've been harping on with the mentorship community there, guys, that like people think of trading in the markets as just in the completely wrong way. They just don't necessarily like, and it's fine. It's because they see all the nonsense on social media that they're like, oh, I want to make X amount per day. Every single day in the market is the same. And it's like, no, it's not. The market's not a fixed income instrument. If you want fixed income, go buy annuities or bonds. Seriously. But again, on the other side, it's like I would highly doubt that anybody has, maybe a couple of you may have enough money to make buying fixed income make you a meaningful nominal dollar amount return. So, but what you have to understand is that like there are times in the market to really put your foot to the gas, and there are times in the market to stop. Yes, when we go in and I give you guys the 500, 1,000, 2,000, 5,000% option trades, yeah, it's fun and that's awesome and it's great doing that. But the most important thing and the real value that I think is in the community there is when I come out and we talk macro and I say, no, stop. It's time to stop. And that's one of the main reasons why everybody in the group is able to have so much success. So we'll talk about this a little bit later, but everybody gets their first month for 50% off with code TRADE. You guys get access to both the courses, the Day Trading Mastery course, the Swing Kings course, the pre-market plans, the private live streams, the macro research reports, the single stock research reports. You guys get, what else? The full list of stocks and cryptos that are about to explode before they do. Even at a bare minimum, just go click the link that's pinned to the top of the live chat there. Go read the reviews. I only have glowing 5-star reviews for a reason. There's only, if you guys want to actually have long-term success in the market, there's only one place that you need to be. This is true. That is true, Daily Taylor. So yeah, the code is TRADE. That's not going to be up for very long though. So let's get ES back up here. The reason why I'm using SPY and not ES is due to rollover. So the charts look a little bit different. But it is interesting that we are holding that zone. Very, very, very interesting. So today is going to be a wild day. We do have, let's see, we do have some more data coming out at 10 a.m. Consumer sentiment, I believe. Yep, consumer sentiment at 10 a.m. So that's going to be interesting. We will probably get inflation expectations as well, which, I mean, if those are higher, that's not going to be good. The other thing we got to talk about here, guys, is Japan. And yeah, we didn't talk about this when I said, oh, everybody's talking about the market tanking. And like, yeah, USD JPY right now is providing us with a decent amount of risk here. Now, 4 days after the inauguration, after January 20th, we are going to get some announcements from the Bank of Japan. I think they're going to start intervening, and a lot of partially what we've been seeing in the treasury market here is Japan selling their U.S. treasuries. Now, the reason for that is as follows. One, Japan is the largest foreign debt holder right now of U.S. treasuries. So Japan is now, and it's been like this for a little while now, they are now above China in terms of holding U.S. debt. When the yen starts to devalue, when this chart goes up, USD JPY, it means the yen is devaluing versus the dollar. When that happens and gets to these levels that we're at right now, there's two things that they can do. One of them is raising rates, which we saw them do last year. The second, which is what they do first, I should have said that the other way, but the second is current it's intervention in the open market. And what they do is that they can either print or sell off assets like US assets, and they go out in the open market and buy or short, depending on the situation we're in. In this case, it's a buy. They would go out in the open market and buy their currency versus other currencies. So they basically like long JPY USD or short USD JPY. And that's where this started to happen. This is currency intervention right here. This is rate cut or rate hike. So intervention, we saw it a couple of times. This is rate hike. So obviously, hiking rates has a longer lasting and bigger effect, and it's kind of that the last line of defense there on their currency. Now, here's what's important. The Bank of Japan will probably have to raise rates again at some point in 2025. The interesting thing that nobody is talking about right now, so you're welcome for everybody in here, is that Chinese bond yields or Chinese interest rates are going down, and Japanese rates are going up. All of you guys should have a good understanding of the carry trade right now, because we've talked about it so much, but they're taking out loans of Japanese yen for a really low interest rate. And what they should be doing is coming over to the US market and buying treasuries. They don't. They go and basically buy the NASDAQ, which is crazy, but that's effectively what they do. But if we see a point over the next like 3 or 4 months here where Chinese interest rates are lower than Japanese interest rates, why would any carry investor in these types of strategies, why would they do it in yen? They could do it in won and get a better interest rate. They do still have exchange rate risk, but they could do it in won. So in the event that we do see the Bank of Japan start to hike, you may not see that drastic market decline that we saw last time, because they could almost just like transfer the loan over to Chinese won and then put the same trade on that they were doing before. So that's still yet to be seen. And it depends on the timing and where those interest rates are when the policy action does take place. So it depends, but we'll see. We will see, ladies and gentlemen. But today is going to be a very, very interesting day. So again, make sure you guys are hitting that like button on your way in. Costs you nothing to do it. Helps me out a whole lot, spreading these streams out to as many people who actually want to learn. I don't really think there's, unless it's like one of the really smart people that we all know and love on Twitter, I don't think anybody else in the kind of the space that we're in here is talking about these things. And it's sad because these are things that you absolutely have to know in order to have long-term success. If not, yields are starting to back off a little here. That's interesting. Yeah, and market's coming back up. So that's what we have to look out for today. The dollar yields and what ends up happening. On the tweet that I put out, I did say this could wick. And right now, what we're seeing in the market is reminding me a lot of, and we haven't talked about this yet. It's reminding me a lot of September and October of 2023, where you started to see like peak fear surrounding interest rates. We saw it happen a lot last year too, where we went from pricing in like 7 or 8 cuts in 2024 all the way back down to 0 cuts and maybe even a hike. And that's where we did the most of our work and the best work in the bond market with those TLT and TMF trades. But the best kind of idea I gave you guys was the day before we started cutting. It was the day before the September rate cut, where I called the top in the bond market. What was nice about that is we found out later that the day after was when Stanley Druckenmiller put on his bond short. So it's always nice when you have one of the most successful macro investors of all time on the same page. That's always nice, ladies and gentlemen. Serge, what's up, buddy? How you doing? Inflation hit a high around that time, I think. It did. It did. And then you had the little inflation scare. And what caused us to go from like 7 to 8 cuts last year in like Q1, I think it was March, all the way back down to 0, was inflation ticking back to the upside. Hydrogen companies, weeks, I don't know. I'd have to look. It's not really something that I look at right now, but in terms of just like energy, I mean, I think energy is going to do pretty well over the next few years here. That would be but I don't know much about hydrogen companies, It's just not my wheelhouse. So we got to see what happens today, guys. Again, there are some setups that we're looking at here. ARM. We haven't even talked about the setups yet. So ARM's looking really good. If this thing can continue to consolidate here, let the daily 10 catch up. I will be interested in that. PDD. This has got a hold here. So this isn't one that we're interested in just yet. But if we can hold the 10 here, continue consolidating, you guys remember the multi-1,000% trade that I gave you guys on PDD. Oh, and this is a really good way to talk about this too, guys. When I say that it's critical to understand the big picture of the market and understand like all the different things happening, this trade right here on Pinduoduo, where it went from 101 to 153, up 53% in like a week. A lot of that thesis was based on our understanding of what was happening in the Chinese economy and saying, okay, is it likely that they are going to release some stimulus here? And the answer was yes, with a good chart setup. And everybody, this was one of the best trades of last year. And again, the vast majority of your trades from in a year, guys, are going to come from just a couple of trades. That's how it should be. It's not this like nickel and diming the market. The margin for error for that, guys. With the like you guys that are trying, most likely unsuccessfully, which is no fault of your own, to just trade these really short time frames, like the 1 minute, the 2 minute. The margin for error is so small. You're fighting against things that just are gonna outweigh whatever you're doing. That's why these larger time frames are so great, and why everybody in the mentorship community is able to have so much success. So again, everybody gets their first month for 50% off. It's literally $1 a day. I should be charging way more a month for what I do here. But I don't. I like to make sure that everybody that wants to have access to this type of information and these types of trades have the ability to. So again, first month 50% off. It's $30. That's it. Thanks, no problem, man. BLS revisions happened back then too. Yeah, the downward revision. Which Ralph, did you see what I sent in the other group? I had that thought, and I was like, "Whoa, this is actually really interesting." So, Ralph has had this interesting thesis, and I like it. I agree with it. He calls it the. I'm going to use different words. The plate of like poop thesis that they're going to hand to the next administration. A lot of that has to do with the Treasury market, with Janet Yellen making one of the biggest mistakes I think that a Treasury secretary has ever made, foregoing the opportunity to sell longer term debt sub 1%, like 10-year, during what was it, 2020 and 2021, and instead doing like 2-year notes or whatever. Um, 2-year bonds at like 0.16%. So now every year or every other year, we have a boatload of debt rolling over every time. So Basent is going to have to deal with that. The other thing, though, is we've seen a lot of like nonsense happen with the labor market data. We saw that massive, massive, massive revision. I think it was August. Was the really big revision. I'd have to go back and double check that, where there was a massive downward revision, meaning that they said that there was, let's say, 100 jobs added, but there was actually only 50 jobs added, and they had to revise those numbers down. Think about what the actual backdrop in the market is saying about that right now. If they do that and start reporting like the real data, because again, you guys just saw, I put it on the Instagram story. That the November data was revised down from like I think 197 to 183, something like that. It was the 190s to 180s on the November non-farm payroll data. If there are massive downward revisions happening in February, in March, or they start actually just reporting it as it should be, what is the effect on the market? The effect on the market would be the opposite of the intended effect of actually reporting the real data as it was previously with the old backdrop. The market would pop significantly on that because then they would price in more cuts, which I think is going to happen. It's not tinfoil. It's just kind of looking at the macro backdrop and saying, is the Fed actually going to be right? The Fed hasn't really been right very often over the last like forever. So, are they going to be right this time? To me, with the way that we're seeing things right now, I would say I don't think so. I think they are going to end up cutting more this year than what the market is expecting right now. So, woo, let's see, ladies and gentlemen. Again, also, we do have Delta post earnings. This could be interesting here. It is fading. This was up about, I think, 9% at one point in the pre-market here. I don't know if I'm going to go for this, but it does look interesting. Airlines. So that post earning strategy video has been out for free forever. The amount of information that I give out and the trades that I give out for free on like YouTube, Twitter, everything is better than most people's paid stuff. So make sure you guys are paying attention. Have notifications on for Twitter there. And a lot of you guys might think that you're following me on Twitter, but you're probably not. It's a new Twitter account. It's almost at 1,000 followers too. We're getting there, ladies and gentlemen. But yeah, Ralph, that's kind of like think about that. Like if they actually like try and report the labor market data as we thought they might. Ooh, what's this day? Ooh, yeah, I like that. Hold on. What do we got here? Veil. That would be an interesting one. Downside. Yeah, I wouldn't. I mean, I don't think. I mean, they might be on here, but I would. Wing and Adobe. I think these are already at the lows though for me. Like I would do something like I'll show you where I like to short things or sell things. Um, yeah, these don't look good, but I personally for me this is just wouldn't be my strategy to short things here. Wing I think is getting hit too. Oh no, that is Wing. What was it? Adobe I know is moving to the downside. Yeah. So the other thing, guys, is we have some real heavy hitters in the private Discord too that send you guys stuff sometimes, and I know some of you guys take advantage of it and see it. Um, so that's another benefit too. But yeah, take a look at that. Those of you guys in the Discord, go look at what Dave posted. Though his research is nuts. I love it. I got to read it more. There's a lot of info though. A lot of info. So, but again, everybody gets their first month for 50% off. Use code TRADE. But what do we got here? 3 minutes to go until market open, ladies and gentlemen. We'll get Delta up here. Oh, I'll show you guys where I would like to short things if I'm going to. It would be this. So when I was selling Palantir here, I actually wanted to short it, but I was like, do I really want to just like completely reverse the position here? Not really. So I just took my profits here right around 71 from a sub 16 average on Palantir. So I'll probably end up owning this thing again. It'll just be sub 50. I would not want to be holding this thing up here. ET phone home. Sorry. Yeah, that looks good. I like to use energy in a lot of those different companies as a barometer over a trade, you know? I like using them as a barometer more. Oh my God, we're 3 likes away from 50 on the stream in pre-market. Thank you guys. We're not going to do we might hit 100. If you guys hit, I don't know. No, we're not going to do you guys know what I'm talking about, but we're not going to do that today. We can't do an ankle threshold. We can't do that. Yields are fading a little here. Market's coming back up. So they're calling the Fed's bluff for now. But we'll see. ET and Palantir made your 2024. Nice. Yeah. Palantir was a great one. I gave that one to you guys, sub 16. SoFi was a good one. That's still sitting at over a double, I think. We did a lot of really Yin was amazing. Like that thing. We bought that in the between 20 and 21. I sold at 51, sold half of it, made it free. I have a free China position. So market's coming back. We're holding my zone. We're holding my SPY zone here, which we could put this up here. So this was the volatility zone from yesterday. So guys, I do send out these volatility zones in the pre-market plan to the Discord every morning. When they're small enough like this, you can just short directly off of them. And this one ended up running to a really solid over 1 to 5 risk to reward for those of you guys that like to day trade. So I mean, guys, what else do you want? Call it like 4 hours earlier, more in the pre-market, somewhere around here. Oh, if we head up here, probably this thing's coming down. Bing, triggered in, dead. So that was an interesting one from Wednesday there. But yeah, everybody gets their first month for 50% off. So, but we'll talk about that a little bit later. Are we doing Dow post earnings? Well, we could if it validates. I'd look at it. I wouldn't do anything crazy on it, just the way it's fading now going into open. So we'll see. We'll see how it looks. I mean, the market's about to open any second now. So we'll take a look at Delta. ARM is an interesting one. What else do we have? What else did I put on there? It was ARM. Oh, PDD is one that I want to keep watching. All right, ding, ding, ding. Market's open. Here we go. Yeah, we can watch Delta. You guys should all know at this point what the post earning strategy is. We don't have enough time to go over it now. But as we get into earning season, that video is out on YouTube. I'll send it to you guys in the Discord again, just so that you guys have the link to refresh your minds when it comes time for us to do that again. So, but we'll be watching this one, see how it wants to move. Oh, all right. It's got a little juice on it. Probably gonna chill until Monday. I probably will too. But think about what we've done this week, guys, and in how like versus the market, versus what the market did. Um, we had the Nvidia calls going into this week, which some of you guys were able to nail that one for well over 600%. Congratulations. I hit it for like 250%, which is good because I had next week's expirations. Good trade. I mean, I posted the gains on that one. That was a solid one. Nothing crazy. Again, I'm not really going into the market with any size right now. But that was good. Then we had Pfizer, which was really good for a lot of you guys. I mean, you guys PDD lost it. Yeah, it's fine. I mean, if it's not gonna set up, we just won't look at it anymore. And then so it was really just Nvidia and Pfizer, and then the tiny paper cut on the break to the upside on QUBT. And then once it started fading, we were out of that for a tiny paper cut, and then it died. That was gnarly. We again, that's why it's super important to understand like if like never get married. And I think this is especially important for those of you guys that are new to the group and trading this way. Um, there are setups literally everywhere all of the time. If one of them is just not going to work, cut it. You guys see me do that all the time on the streams. Like if it's not going to do everything that I needed to do right away, I'm out. No thanks. Because there's always going to be another one right around the corner. Well, AMD has no friends. Yeah, AMD sucks right now. ARM's got a hold here. I think Marvel was looking okay, but I don't think this is gonna hold. It could. It could still hold here. Yeah, there you go, Daily Taylor. Walgreens. What is that? WBA, I think. Yeah. Oh wow. Hold on. Where's CVS? Where's CVS? Because I love CVS right now. Yeah. All right. I would get longer dated on this. I actually like this a lot. We were talking about this for longer term holds. There's a couple of different elements of this thesis too, with like M&A and stuff, but I'd get some time on this. This could actually be a really fun one. Where's Delta? We're 2 minutes into the market. Okay, yeah. Wait for that CVS. Because remember, look, think about what happened on the last one, the basin break. Uber, boom, boom. Thank you. Uber actually could set up here too. Oh, WBA had earnings. Hmm. Okay. I I mean, I kind of want to do it post earnings, but well, if Walgreens is doing it, hold on. Yeah, it's a little much though. That's too much of a gap in a move for me to really be interested in this. But yeah, watch CVS here. Yeah, the M&A stuff. Okay, so this is another really important thesis that we've talked a little bit about here. I actually tweeted this because Jay from Special Situations had a good point, or he just kind of tweeted about M&A, and I was just like, all right, well, I can explain this to you guys. Let me see if I can find it here. All right. So one of the only this is the tweet. Only one of the only ways to solve the debt crisis is to inflate. The only way to not completely collapse is to combine that with increased GDP. A weaker dollar makes it easier for international corporations and companies to buy American. Businesses at the bottom end of the totem pole won't be able to compete at scale because higher wages will be required by the labor market with inflation running hotter. Big companies will swoop in and buy them out because they can, and there's no more Lena Khan to stop it. I actually like this. If CVS, I mean, can break, I almost want to give it a day here. Or this would be like a slow or like scale in for me, but like this is an interesting move here. There it is. Yeah, I might take something on this. I just want to see like how are the premiums. They're okay. They kind of stink, honestly. What about these? Those are good. Yeah, I like that. Oh, Delta's doing it right now. I think I'm gonna leave that alone, just because. But yeah, okay. So I grabbed a little bit of CVS as a scaling, little bit, nothing crazy. So, but if you want Delta though, Delta did it for you. 66.61 is the entry there. Am I not in spot? No, no. I told you guys I wasn't taking spot. Where does it do? What does it do now? Yeah, I mean that's all right holding here, but no, I didn't take this one. It was going into NFP, and I was like, I don't want to touch that. But yeah, CVS is looking good here if you guys want that one. Not now. Don't touch it now. But on the break of 66.61 was good. So I have a little baby scaling on CVS here. 100% on Delta already. You traded the dailies, didn't you, Jason? You wild. You guys are crazy. And that's one of the best things about the community here that like once you guys see it, like if I just decide not to take something, it's like, well, you guys can still hit it. CVS moving back down. Degen. Yeah, that is Degen-y. Yeah, that Delta looks interesting. What's the market doing? Down. What about like PDD? How do those look? Nah, we're not gonna be looking at PDD anymore. ARM, how does that look? That could start to set up into next week. No, the only things I've done this week, Alfie, are now the baby scaling on CVS, Nvidia, Pfizer, and then the really tiny paper cut on QUBT. That's it. That's all I've done. Market not having fun here. But again, look where we are. Right in the zone. Wow, Delta, that was a good one. So far, I mean, if you had the dailies on that, that was a nice one. Which I wouldn't get the dailies on that. That's stupid, Jason. But good for you. Like, I actually kind of want some more of this. Russell 2000 index on correction course down 10% from record closing high. Yeah, CVS is starting to move here. I don't know. We'll see if it wants to rip. But this is this is long. Like I'm not trading the next week's on this. Like I got some time on this. See what happens. See what happens. I like that setup a lot. Uber green. Uber could be setting up here. Wow, Delta. Congratulations to anybody that grabbed the Delta, the post earnings move with the 5-minute opening range break. You're up $1 since entry. Jason, what are you up on these now? Like, Jason, what do you got here, buddy? Those have got to be pretty nice. Those have got to be like 200-300% now if you're on the dailies, dude. So I'm gonna give you guys a quick rundown of the post earning strategy. Very quick. Very quick. When you see a stock report positive earnings and it gaps up over 5%, all you're looking for is an entry off of the 5-minute opening range break. That's it. You're at 65% on the deltas. Yeah, if it keeps pushing here, you get to 68, which it ripped just now. Though that might give it to you right there. Again, make sure you guys have your limit orders on. It like don't be trying to sell things at 100%. Have your limits already there. That's a great one there. Dang, I kind of wish I took that one now. And the best thing about this post earning strategy too is the win rate is like really high. And you just turn your brain off and you're like, okay, earnings beat, nice gap up, over 4.5%, obviously lower than like 15. You don't want to be trading them there. Trade the buy the 5-minute opening range break and scale out at 100% and then sling them. Sold at 198%. Guys, I don't know how much easier I can make this for you. Seriously. So I'll grab that link in here for you guys. Again, this is the only day that we do these public live streams here. So again, everybody gets their first month for 50% off. It's literally $30 for your first month. You could have made like 10, 15, 20, 100 times that in just that trade right there. So again, you guys get both courses, the Day Trading Mastery course, the Swing Kings course, the full list of stocks and cryptos that are about to explode before they do, the pre-market plans, the private live streams, the macro research reports, which the 2025 macro research report is awesome. And then, what is it? The single stock research reports as well. Like, and you get full access to me to ask questions at any time. CVS is pushing here, new highs. Up 115% on Delta. Russell, there you go, buddy. There you go. Going back in. Hey, stop. Wait, I was going to say, Jason. Thank you. No problem, guys. No problem. Arm down. Yeah, this is why I didn't want to do anything on Spotify before. CVS looking great there, though, guys. Look at that one. Oh, I'm up 10% on CVS. Look at me. Look at this. Nice. Yeah, I like this. I got a little bit more time on this just because I think this could be a very interesting one over the next few months. So, see what happens. See what happens, man. Stop will be a day low. Oh, where's Delta? I mean, that's still really good. Anybody that took that Delta with the post earnings move right there, boom. PDD did not help us though. Nah, PDD invalidated. We're not gonna be looking at that one. I wish though. I mean, I wanted PDD to validate there, but again, that's one of the beauty of like what we do here is like I can identify a setup, and you guys all know what we're looking for. If it just invalidates, nothing gained, nothing lost. It's like okay, it's dropped. Cool. It's the same thing with all the cryptos we were looking at over the last week. It's like those setups looked nasty. Okay, did they break levels to the upside and trigger an entry? No, they tanked. Okay, like whatever. Our only job in the market, guys, is to be able to put ourselves in really solid positions and situations to have success. That's it. If they don't validate, they don't validate. And again, if you guys haven't already, make sure you guys are hitting that like button on the way in. Costs you nothing to do. It helps me out a whole lot. Todd is free on Delta. Great work, guys. Free Delta up over 200%. Oh, you're really slinging the CVSs. All right, good for you. Good for you, buddy. Yeah, it's moving up. I like this. Delta's on a ripper here. So yeah, congratulations to everybody in that one. The post-earning strategy strikes again. That's one for one on the last earnings cycle. I think there were like 9 or 10 of the post-earnings moves, and only 1 or 2 of them didn't work. And all the other ones are minimum 100%ers. We had one, I don't know if Jay's in here today, but we had one that did 6,000%. That was insane. If you follow the rules, I don't see how you can be losing here. No, it's like this is if you guys want to have long-term success in the market, this is the only place you need to be. So again, make sure you guys take advantage of that 50% off your first month deal. It's $30. That's it. The link's floating up there. It's pinned to the top of the live chat. The code is trade. Dude, I can't get this thing open. Holy Delta. Dang, I wish I took that one. See, I get a little weirded out sometimes on the post earnings moves, and I shouldn't because the strategy is so nasty. Like, come on. Open sesame. If this gets to 69.70 today, guys, you guys might be up 500%. 70. I think if it goes up another $1 from here, I mean, you guys might really hit one. Targets running, don't really care. There's not a setup there. Ooh, they whacked it. Uh-oh, that was a seller. CVS back down, but that still looks good. Dude, why can't I open this? There's something wrong with me? I think so. Come on. Come on. Nope. Struggling. We can look at Target, but I don't think we're going to be looking at anything on it. No. It's up. That's really it. It's like, oh, it's up. It's like, okay, I don't really. Yeah, arm's got a hold here. Depending, yeah, you're flirting with the bottom of the zone here, ladies and gentlemen. You're flirting. Short it. Dude, you gotta relax on the shorts, dude. You know what? Pod, go look at what Dave posted in there. Those can be, you guys can go look at your shorts. Those can be the shorts that you look at. Just scroll up in the Discord there. We have some like serious heavy hitter market professionals in there giving you guys stuff. There you go. Come on. I'm on the struggle bus here. All right. Short it. You're funny. Where's Delta? It's still holding up there. That's still looking good for you guys. So, all right, let's see. Oh, geez. We didn't look at this yet. Yields are backing off a little. That's good. That's what you want to see. That's what you want to see, and exactly what I thought was going to happen. Again, if you guys saw that tweet this morning, this is what I thought was going to happen with the 10-year. It was going to wick. AMD's dying. Yeah, it sucks. I still might hold it. I don't know. I own it at $11.39. I have a negative cost basis on it. Like, I don't care. What price is the bottom of the zone? On SPY, I'll tell you. Oh, it's coming to it right now. Ooh, that's bad. 582.29 is the bottom of the zone. It's not exact. It's like 582. Yeah, Apple sucks, I think. Delta. Oh, uh-oh. Those are already free, though, for you guys. So, yeah, Apple, I think, looks terrible. Yeah, Apple looks horrendous here. Apple, actually, when this market turns around, Apple's going to give us something really good. Like, it could base and break, which would be really interesting. That could be really fun there. So, well, you guys are slacking on the like button now. Uh-oh. CVS moving back up. I really, really like CVS here. Not only just for a trade, but for like long-term ads. I like that. There it is. That's a good-looking chart. Like a really good-looking chart. So, we'll see. AMD, or, yeah, AMD's terrible. I think that's new lows. Ugh. Apple? Well, I gave you guys 1,000%er on Apple, like, what, a month and a half ago? That was a good one. That was a really good one. Again, guys, nobody else is doing it like we are. Keep it simple. You don't need all this, excuse my language here. You don't need all this bullshit on the charts. Keep it simple. You got people with just like, you can't even see the candles. You got people that are like, let's trade the 15-second time frame. You're like, hold on. You're trying to be a high frequency trading algorithm here? You're trying to beat them? Oh, they're gonna front run you and completely screw with your order before by the time, but like in between the time that you click your mouse and the order executes. They're gonna beat you. All right? Use the only edge that the market has ever had and only will ever have. Information. That's what the edge is. There's no solving the market. You miss it, but Apple can make giant moves. You gotta hold. Dude, like I saw like Lux Algo posting stuff that was like, oh yeah, look at all this. And I go, none of that works. I was like, none of this is useful. I saw it and I was like, wait a second. I think they posted something about like growth or like new things, and I'm like, none of that works. None of it. I don't get it, man. I don't get it. The fact that more people don't trade like we do here is mind-boggling. It's like, why wouldn't you want to? Like, dude, I literally saw the Lux Algo thing, and it was like, I can't even see with the candles. Like, how am I supposed to read price Lux Algo if I can't see the candles? Guys, the trading space is cooked. It's over. It's all bad. All of it. It's terrible. I hate it. Nobody knows what they're talking about. Ever. Like, oh, are we gonna do an STV rant today? Are we gonna start ranting? Are we getting close to a rant? This is not looking good here. You really gotta hold here. If it doesn't, this market could get really nasty to the downside. Vibration? I don't know, man. Markets don't vibrate. I don't know what they're talking about there. They move to the right and up and down. And the candles, the way that they form on the chart and the way that you see them tell you exactly what you need to know about what is the highest likelihood of the next move. It's all you need to understand. It is not that difficult. Then when you really start, then when you're like, okay, you understand exactly how to read stuff, it's like, okay, then you sift through and you say, time for a real rant. Do you trade Forex? Oh God, here we go. Here we go. There we go. Oh my God, this thing is just. CVS fading a little bit there, but that's just the market dragging it down. Oh, there we go. What are yields coming back up? Uh-oh, market. Uh-oh. Yeah, yields are coming back up. Oh, we got a lot of Delta gains in the community gains. There you go, Tommy. 135% on Delta. Congratulations. That's awesome. That's awesome, man. Yeah, I mean, I'm good on the CVS position for now. I might add to it a little later, but I like what I have on it. What's the Ortex on GME? No shorts. They're all gone. I'm just kidding. You just couldn't take it seriously? Dude, I don't know, man. Then you have that ICT scammer that says that he coded the market. It's I don't even know, man. Like, you got people stupid enough to think that that's real. All right, you tap the bottom of the zone and you bounce. So looking at this on a larger time frame, look where we are. So we have fallen through it a couple times. And you've gapped down and sold, bought back up into it. So again, it's not a hard zone, but if you start flirting with these levels like 580, you've got issues in this market here. Yeah, we do have consumer sentiment at 10 a.m., which inflation expectations are probably going to be a little higher. All right, let's see what we get here. I love this. I love the look of this here. Again, I wouldn't call this A plus, but I would say that you got issues. Yeah. I really do like the way that this CVS chart looks here. We've talked about this. What? I think it was on the watch list like 3 days ago. Let me look. Yep. It's the most recent chart on the watch list for you guys. Boom. Guys, my special talent is finding stocks and cryptos that are about to explode before they do, and then I just tell you guys about them. And then they explode. And then, yay, we all make money. Like, it's fun. But yeah, this is the only day of the week, guys, that I'm live publicly. So again, make sure that you guys take advantage of that 50% off your first month there. I'll throw that link in the live chat. The code is TRADE. There you go. CVS can break over 48 today. I'd be happy. But again, I have time on this. So I don't really care. What else we got? Oh, dude, this is one of the best things that like seeing you guys have success like this. Like Romeo just came in and like made $528 today on Delta. That's unbelievable. I mean, like having the ability to do that, guys, and seeing your guys' growth that you've had over the last year has just been unbelievable. So I'll put that out somewhere today. That's unbelievable. $528 on the day, just on Delta alone. There you go, man. That's great work. I am going to be increasing prices at some point to the probably at the end of February to the mentorship group. So make sure you guys lock in your rate now because it's not going to be that cheap forever. But that's awesome, man. Congratulations. You guys deserve it. All right, let's see. What was that? Oh, no, I don't care about that. Yeah, you're bouncing off the bottom end of it here. Hold on. I don't want to go on this chart. I want to go on this chart. Is this healthcare? That's really interesting. Where's UNH? UNH is ripping now, too. Huh. Okay. You guys know how I feel about trading healthcare, but like I did say that this is one of the only time periods where I might do it just because of where yields are. Like the move up in yields right now, guys, it's probably going to cap out at some point very soon. And then what happens when yields start to move lower? Things like biotech and healthcare and real estate in those sectors start to look really good. Also, guys, hold on. We haven't even talked about this. Where's that? Oh, come on, RKT. Oh, I want RKT so bad. You guys are getting a lot of free game today. Like RKT sub 10, I'm going to start watching that thing like a hawk. Let's see here. Oh, consumer sentiment. There it is. There it is. There it is. There it is. Hold on. Hold on. We got it just now. You got it, Ralph? Oh no. That's not good though. We just sold through the zone. I mean, you do have this down in here that you got to hold, but I don't have it yet. The sentiment data. Yeah, I don't see it yet. Hold on. I'm looking for it. Yeah, that's a data candle, but I don't. Oh, I thought it was 190 something, Ralph. It's a miss? Yeah, I just don't see it yet, though. Financial juice? I'm on it right now, and I don't see it. Hold on. Unless I'm looking past it. Oh, there it is. Yeah, so remember how I talked about inflation expectations most likely going up? University of Michigan 5-year inflation preliminary inflation sorry, hold on. Let me learn how to read real quick. University of Michigan 5-year inflation expectations actual 3.3%. The forecast was 3, the previous was 3. So inflation expectations are higher. What happens when inflation expectations are higher? Well, a rational thinking participant in the workforce is then going to request higher wages. So this is actually something that is it could easily start developing in a good way. In a good way for markets, because if you start to see more workers requesting and requiring higher wages from their employers, there could be more layoffs, which is bad, obviously. But if the unemployment rate starts to tick up off of that, then you could start to see cuts. So it's a self-fulfilling prophecy sometimes with inflation expectations. So they're listening to the Fed right now. Sentiment was 73.2, forecast was 74, previous 74. So it's really what this is doing is reacting off of inflation expectations is how I see this right now. But this market's drilling right now. Stagflation fears could be ramping up. Yeah. You can always go back and watch MoneyWix. Yeah, I mean, make sure you guys are hopping in and taking advantage of that deal. It's not going to be around for forever, and the prices of the Discord are going to be going up. Yeah, we're taking out lows here, so now you got to watch much lower. Yeah, which is good. I like this. Here's kind of how I'm viewing this, guys. If the market tanks here, we just sit on the sidelines and we don't lose any money on the swings. It's fine. If it does tank a lot, it's gonna give me the ability to deploy a lot of that cash that I was sitting on the sideline, which I want. I need to put that cash to work. Like I've just been selling on the way up. So I want to be able to start deploying that capital. I haven't found. There's been a couple things that I do like. Like where's Aspen today? How's that doing? Yeah, I'm gonna give this a little bit of time, but I do like this one. This is an interesting company. CVS still looking absolutely fine. Yeah, so up a little bit on CVS, nothing crazy. New 50-week, 2-week low on RKT, good, good. Send yields higher, send RKT lower. That's what I want. Because at some point, this is going to turn around, guys. It's not everybody like when I call the tops and bot. Oh, this is another interesting thing. I tweeted out like how I called the top in bonds, and somebody was like, "When's the top going to be now?" And it's like, guys, you don't call a top like way before it happens. You only see the signs of a top or a bottom as it's happening. Because if I'm just like, oh, it's gonna go to this level and sell, there's no it's like it's guessing. But I can give you a good understanding of like, okay, this is topping or this is bottoming, if that makes sense. Which right now on RKT, there's no signs. This thing's probably going sub 10, and that's what I want it to do. Go sub 10. CVS looking good here though. So we'll see what happens. But I like that chart. You want to get shares? I want them too. I think it's going to be very interesting on RKT there. But it needs the base. Like, here's what I want it to look like. I want it to look like. Actually, we're going to take a look at this and see how bad this is. But I might have to sell that. This was SoFi here. So I want it to start basing. So we got SoFi at 655. It's at 1386. So still up about 100% on them. 70% of your Roth is cash. That's a lot. CVS is hunting new highs right now. Cool. They're spready. They're doing some weird stuff to the chain, but I like it. So, but yeah, congratulations to everybody that nailed that Delta move. Good for you guys. You guys got free Deltas now. If you want to hold them, great. If you want to sell them, by all means, do what you got to do. Did anybody else get CVS? I like this one. I got a little more time. Oh, I know some of you guys did, but some of you guys are playing it a little too tight. I want more time on this thing. I think this thing could make a nice strong move to the upside there, especially with XLV looking good. Let's see here. Yeah, I like that. Market not having any fun. Lending Club getting mauled. That makes sense. Oh, what was the one that Anti was talking about? I think it's LD. Yeah, this one. Is this thing getting killed? Yes. End of the month? Yeah, I have Marches. I have Marches on CVS. Yeah, I would expect Len to get drilled. Oxy could be doing very well with oil moving, but we have to wait and see. How is Oxy doing here? I don't know. That's why I don't like these oil companies. Like, Oxy's up 1% here. It's all right, but, like, look at oil. Oil's ripping. Like, the move is that if you want to take advantage of oil, you trade USO. See? You trade USO, US oil. Remax is probably getting drilled. Yep. LDI, though, is one that could be interesting here. That'd be fun. Like, you could get some action on this thing. Not yet, though, obviously. It's not time. It is not time. Let's see. More community gains here. Dawn with 4.5% on the day. There you go, guys. Seeing you guys crush it the way that you do all the time is just unbelievable. So shout out to all of you guys in the mentorship community. It's awesome seeing you guys win. Yeah, up a little bit on Delta, nothing crazy. Yeah, Remax getting drilled. I want to see if CVS can peak over 48 today. That'd be fun. Again, same deal with those. Those go up 100%. I'll make them free and then let them rip. Because I have until March. I got time on them. They're not going to move that much. Oh, new lows. This is dirty. You're up 100% on CVS. I don't know how you did that, but good for you, man. I mean, that's make it free territory right there. Make it free, let it rip. I mean, I don't know what you did, but if you bought that like right as I started talking about that this morning, I can see that from like 46.72 a dollar. Make it free, let it rip. That's how I like to do things. This is bad. I mean, I think you could go fill this. I think this is the election gap, isn't it? Yep. Yep. This is the election gap right here. You might fill this. Carvana round 2 is printing. Nice. Nice. Yeah, I wish I took that short. We were talking about shorting Carvana with leaps. I just didn't do it. Palantir could be one though. Palantir I think is going sub 50. If this market really starts to get nasty, which I kind of want it to. Like 35% on longer dated. Yeah, see, mine aren't moving that much. Let me look and see what mine are up now. Mine are up 10, 11. So Not bad. I mean, I'll take it. Good start. Good start on him. Market not looking good. So, and this is, you already shorted Palantir? Good. Good. That one I agree with. Same day I sold? Nice. Yeah, that was great. I was thinking about it. Like I really was thinking about getting some puts on that. I was just thinking, I was like, what's the point? Take the gains. Um, but I think you guys are starting to realize, especially those of you guys that are new to the community, like one of the most valuable things that I do in there for you guys is letting you guys know when the times are to really get going and when the times are to stay in first gear and don't do anything crazy. And this is one of those times. You were hoping it wouldn't be an SQ problem. Well, think about it, Willard. You're following me on it, so you're probably going to be all right. Like if I'm selling something, there's a big reason for that. That valuation is way too extended. The market doesn't look good. The daily chart doesn't look good. Don't try and outsmart the 10 to 20 daily moving averages. You're not smarter than them. And look, I saved myself a decent chunk of those gains there. Look where it is now. It's at 65. I was selling at 71. Thanks. I mean, I could have sold this a little bit earlier, but I'm still perfectly fine with like selling this thing way up here at like 71 because I was long from down here, guys. Like down in this range. Fine with me. Yeah, this is not good in the market here. It's fine though. Like I want to deploy capital. That's what I want the ability to do. Deploy. It's a lot of money that I got to put back into the market here. I shouldn't ever be the cash levels that I am right now. I shouldn't. Just based off of like suitability. I should always have like almost full allocations, but I know what I'm doing. So I mean, I've been more active in that account too, which is why I was able to slap the S&P around last year. Just crushed it. I think even net of taxes, I killed it. DraftKings. It was starting to like give a potential setup here. How's it look now? Yeah, it's got a flat line from here. That scares me. Just slow grind up after a big sell off. That's got a flat line, but that I would be interested if it flatlined there. Definitely would be interested. Ugh, AMD. That one hurts. That one hurts. Bye-bye, market. Are we just sending it to the lows? Yep. Oof. Oof, that's bad. This is the election gap right here. 576.83. You might do that today. You might end up doing that. So I like where I'm at on CVS here for now. We'll see what happens to it. Bye-bye. Yes. AMD looks like it's going to visit my first one. No. It's going to be fine. I'll still sell it. I mean, it's fine. I'm not really like worried. Why would I? Are they indicting Trump today? For what? Oh, sentencing? Yeah, but like, what are they gonna do? What are they gonna do? Dude, the funniest, I'm like, you guys can be on either side of the political aisle. I don't care. But you cannot deny that the statements that are made sometimes are freaking hilarious. No more windmills. Like, that's like, I understand what he's doing and everything, but the way his delivery is so funny. Like, we're gonna name the Gulf of Mexico the Gulf of America. Like, it's just so funny, man. It's just comedy. I love it. It's just entertaining. 6% on the port. Thanks, STV. Enjoy your weekend. Dawn, you too. Great work. Great work today, guys. Again, this is what we do around here. Simple. Everybody crushes it, and then we just stop. Then we're done. Gulf of America. He's trolling. It's just funny. Like, you can't, like, you can hate him all you want, but, like, it is funny to watch. The cats and dogs thing was funny. I mean, that was it's well, I mean, like, it's just funny to watch, man. Take him literally. Yeah, I heard a good way of explaining it one time. It's like, don't take him literally, but take him seriously. Which is interesting. It's a good way. It's a good way to look at it. Oh, we haven't even talked. My Funded Futures guys still doing those sales for you guys. On the Starter Plus. If you guys haven't done that yet, make sure you guys take advantage of that. I mean, I can grab the link for you guys in here, but I'll probably send it to the Discord later. Goolsby quotes. They new? I don't see anything new on the Goolsby side. TSM next week. Yeah, I mean, earnings season is gonna heat up, guys. Like, you guys just saw the Delta play out there perfectly. So we're gonna have a lot of those. We're gonna have a lot of those. All right, CBS, what do you got? What do you got for us? I'm up 11.5% on those. That's good. I'll take that. Good start. Good start there. Market comes back up today. That could get a little juice. Or not, though. It could just have a mind of its own. Could just have a mind of its own there, ladies and gentlemen. So we'll see. Yeah, great work today, everybody. I mean, the making, like, think about the trades from this week. Nvidia gem, Pfizer gem, QUBT tiny paper cut, and then you guys nailed Delta, and then CVS is looking good. That's it. Keep it simple, guys. You don't have to do all of this like other nonsense. In order to have different results in the market, you have to think and act differently than everybody else. It's as simple as that. Goolsby, the reason inflation looks sticky now is because of the jump a year ago. Oh, that's right. Because the data is getting taken out. But it's shelter, though. It's still shelter is the main thing that's affecting it. So I guess, but not really, you know? Dude, I love those jokes where it's like, we're not even trading, and then we nail everything like that. Well, it's picking your spots. Like, you guys see the ability for us to pick our spots here and then nail stuff. So, all right, guys, it's 10:20. We're gonna be wrapping it up for today. Those of you guys in the Discord, you guys are all gonna get the what do you call it? The watch list this weekend. We're gonna have a lot of interesting things to talk about there. But again, For everybody that still needs to take advantage of the 50% off their first month deal, it's literally only $30. So you guys can come in, learn everything, read the 2025 macro research report, take the courses, understand the strategy, and then you guys get to start printing with us. I mean, you guys just saw it today. Delta, there you go. Calling stuff out for free. So team, great week. Nothing crazy. We'll see what happens going into next week. This market is looking a little iffy here. So you guys might get a little single stock research report coming up soon, or a sector research report. I think there could be a fun one forming very soon. So get ready for that. But again, just a little bit about what you guys get in there. You guys get both the courses. You guys get the pre-market plans. You guys get the private live streams every day, the full list of stocks and cryptos that are about to explode before they do, the macro research reports, the single stock research reports. I should charge like $200 a month for this stuff, but I don't, because I want to make sure that all of you guys have access to it if you want to. But prices will be going up in the near future. So if you want to lock in your rate, make sure you guys check it out today. So team, have a great weekend. I will see you guys later. Peace.